India's aviation industry is flying high, literally. Airports are packed, planes are full, and the country is building new runways and terminals like never before. For investors, all this action can look like a golden opportunity. After all, if more people are flying, shouldn't airline stocks take off too? But here's the reality. Investing in airlines is a lot more turbulent than it seems. Today we are going to look at the financial health of Indian Airlines, the potential risks and rewards of airline stocks, and whether these investments are really worth your money. But first, a quick disclaimer. This video is only for educational and informational purposes. It's based on publicly available data as of mid-2025, and it is not an investment advice. Please do your own research or talk to a qualified financial advisor before making any financial decisions. India's aviation looks busy, but is it profitable? There's no doubt that Indian aviation is growing fast. In 2024 alone, over 155 million people flew domestically, and this number is expected to nearly double by the end of the decade. From business trips to weekend getaways, flying has become a lot more common and a lot more accessible. But while the skies may be crowded, the balance sheets tell a different story. On the surface, it might look like airlines are cashing in, but the truth is, most of them are barely staying profitable, and some are still bleeding money. IndiGo, the market leader, has managed to stay in the black consistently in recent years, which is impressive in this industry. On the other hand, SpiceJet has been dealing with mounting losses, delayed payments, and regulatory trouble. And then there's Air India, which is now owned by the Tata Group and going through a massive transformation. While the brand is strong and the ambition is clear, profitability is still a long-term goal, not a short-term result. You might be wondering, if demand is so strong, why aren't airlines making big profits? The answer lies in the business model itself. Running an airline is incredibly expensive. You've got to lease or buy planes, pay for maintenance, hire skilled crew, and deal with the constant operational costs. On top of that, aviation turbine fuel, or ATF, is one of the biggest costs, and in India, it's taxed heavily and can fluctuate widely in price. Then there's the issue of pricing. Airlines often compete fiercely on ticket prices, especially in India, where cost-conscious travelers dominate the market. This leaves very little room for profit. To make matters more complicated, Indian airlines also face frequent regulatory hurdles. Government taxes, airport charges, and policies can change quickly, often putting additional financial stress on these companies. So even in years when passenger traffic is high, profitability is still not guaranteed. Now let's get to the heart of the matter. Airline stocks. In India, only a few players are listed. IndiGo, operated by InterGlobe Aviation, is the biggest and strongest on the stock market. Then there's SpiceJet, which has been struggling, and Jet Airways, once a major airline, is technically still listed, but its trading has been suspended after bankruptcy proceedings. IndiGo stock has seen decent growth recently. In fact, in the past year, it's gone up by nearly 40% thanks to its strong network, lean operations, and dominance in the market. SpiceJet, on the other hand, has lost investor confidence. Its stock has fallen sharply over the years, and many analysts now view it as high risk. So if you are considering investing in this sector, your real choice, at least for now, is IndiGo. But even here, the risk factor remains. The airline might be going well today, but aviation is a highly sensitive industry. One bad year of fuel prices, policy changes, or geopolitical events, and everything can turn upside down. Globally, many big investors have mixed feelings about airline stocks. Warren Buffett, for example, famously invested in US airline companies and then exited completely in 2020, calling the industry too unpredictable. In India, mutual funds and institutional investors do hold airline stocks, but only in small amounts and usually as part of a diversified portfolio. That's because airlines are not considered long-term compounders. Some experts argue that if you believe in the growth of Indian aviation, you might be better off looking at companies that build airports, provide ground handling services, or lease aircrafts. Businesses that often have higher margins and more stability. So let's bring it all together. Should you invest in Indian airline stocks? If you're someone who understands the risk, is willing to track the industry closely, and prefers short-term to medium-term opportunities, then a stock like IndiGo might be worth exploring. But if your goal is long-term, stable growth, and you prefer to sleep peacefully at night, airline stocks may not be the smoothest flight. What's your take on investing in Indian airline stocks? Do you think it's a high-risk gamble or a smart move for the future? Drop your thoughts in the comments. And if you found this video helpful, don't forget to like, share and subscribe. We post every week about aviation, business and everything in between. Thanks for watching. And until next time, stay curious and fly safe. See you in the next one.